Hey guys, this is Ihab. Since we are 2 months away from the tax season and actually beginning to file your personal or business taxes, I thought it would be a good idea to do a video about just simple tax tips that you have to prepare for and how to maximize your tax deductions and refunds. That way you maximize your deductions as well as you save a lot of money in case of a penalties or interest. So tip number 1 is know your filing status. As simple as that sounds, a lot of people don't even know their filing status. Just because they're single, that doesn't mean they have to file single. And just because they're married, they don't necessarily need to file married filing joint. So you have to know your tax status, and that's going to determine your filing status. That's going to determine how much deduction your standard deduction is going to be for that specific year. For example, single status is completely different than claiming head of household. Even though you can still be single, you're not married, you're not legally married, you have a dependent to care for, then you can file as a head of household. That deduction and that status itself is completely different than filing single. Likewise, if you're preparing to file married filing joint or married filing separate, just keep it in mind. Or if you have a question, ask your CPA and they will know which status you should be filing as. But let's say you filed it yourself, for example. You made a mistake, you selected the wrong tax status, you filed as single, you should have been head of household. You don't know what to do, just ask your CPA. There is a way to fix this. They can amend your tax return and they can fix it for you. Tip number 2 is file on time. I don't know how much I have to emphasize this because I emphasize it with a lot of my clients. They still don't file on time, but if you don't file on time, there is a huge penalty for you. The failure to file penalty is 5% per month. This is a huge penalty. You try and avoid it at all costs. If, for example, comes, April 15 or March 15 for corporations, and you can't make it, and you know ahead of time that you cannot make it, file an extension. There's a way to file an extension. It's an automatic extension. The IRS will give you a 6-month extension where you can file within that 6-month period. So they're not going to penalize you for filing late because technically you filed an extension. But you have to keep in mind, you have to file the extension before the actual deadline. So you cannot file an extension after the deadline. You cannot file an extension after March 15 or April 15 for individuals. You have to file it before the deadline. Otherwise, it's not called an extension because they know you're late already and they will start penalizing you. And you can no longer file an extension after the deadline. So always file on time. You have to do it. If you don't and you know you're not going to be able to make it, just file an extension ahead of time. It's a simple process. If you don't know how to do it, again, ask your CPA. They will file an extension for you, but it has to be done before the deadline. Tip number 3 is avoid paying penalties. This is technically just free money that you're giving to the government. I don't understand how people can pay a lot of money in penalties and interest, and they don't seem to care that much about it. It's mind-boggling. Whether it's late filing penalty, late payment penalty, underpayment penalty, there are so many different penalties that the IRS can hit you with. Try to avoid these at all costs. If you don't know how to avoid them, again, talk to a CPA. They will walk you through how to avoid these penalties and not have to deal with them. Again, that's free money you're giving to the government. So it's your own money and you're just handing it to the government for no reason. So these are not taxes. These are just penalties. They're penalizing you for doing something wrong. Basically, it's a punishment. But let's say you get hit with a penalty. So for whatever reason, you get hit with a penalty, a late filing penalty, or underpayment penalty, whatever the case might be. There are 2 things that you can do about it. Number 1 is you can ask for the penalty to be removed. A lot of people don't know this, but if you don't ask, they're not going to do it for you. So if you ask and call the IRS and tell them, hey, this is my first time filing late, can you please remove the penalty? And most likely they're going to remove it for you. Especially if it's the first time that you're late or filing late or underpayment or whatever the penalty that they hit you with, they're going to remove that penalty for you if it's your first time doing it. But again, if you don't ask, they're going to keep the penalty. Why would they remove it? The second thing that you can do to remove the penalty is you have to have a reasonable cause. And reasonable cause can be, it's an illness, death in the family, a major issue, a hurricane, something happened that prevented you from either filing on time, paying on time, whatever the penalty that was for. Whatever that caused you to be late and you get penalized for it, if you have a reasonable cause, call the IRS and tell them, I have this issue and this is what happened. If they see it as a reasonable cause for a reasonable human being to say, hey, yeah, I can see why you're late, most likely they're going to remove that penalty for you. But again, it has to be a reasonable cause. You can't just say I was on vacation and that's why I couldn't make the filing. That's not going to happen. They're not going to remove the penalty. But if you have a reasonable cause, just call them, tell them this is what happened, and they will remove it for you. But again, I'll try to avoid all this from the beginning, try to avoid paying penalties, try and avoid being subjected to being penalized so you don't have to deal with that headache. But in case you do, then you have options to remove those penalties. Tip number 4 is claim your refunds by filing prior year tax returns. And I have seen this with a lot of my clients where they come to me and they select a specific year where they're filing. But if you ask them about like the previous year, the prior year, most likely they haven't filed for whatever reason. If you don't file, if you have a refund with the IRS, you're not going to be able to claim it. So that money that you have with the IRS is going to stay with the IRS. Unless you file a tax return, they're not going to give you the money. So whatever year that you missed and you think maybe I should have filed, maybe not, I would suggest that you ask your CPA and tell them, hey, I haven't filed for such and such year. Can you please look into it? Maybe I should file. Should I file or should I not? They will tell you. If you have a W-2, 1099, whatever it is, they will tell you you should file or you should not. Also keep in mind that any refund that you have with the IRS will be forfeited after 3 years. So after the 3-year mark, even if you have a refund from a prior year, let's say in 2016 or something, and then all of a sudden in 2021 you're saying, maybe I should have filed, maybe I should file, kind of too late because the 3-year mark has passed and you no longer qualify to get that refund. So you basically gave the money away to the government and they're happy with it and you can't claim it anymore. That money could have been invested for 3 years. So don't waste a dime. If you think you have a refund that you can claim from prior years, go ahead and file the taxes. Trust me, it's worth it. Now, tip number 5 is always select the correct withholding on your W-4. Now, if you are an employee working for an employer, for a company, for the government, for private industry, whatever it is, you probably have filled out a W-4 when you started your job. That part is critical. A lot of people just ignore it or they just wing it and just fill out with whatever information they know or they don't even know. But at the end of the year, that's going to affect your taxes significantly because I've seen it with my own clients where they show me a W-2 and I don't see anything being deducted for federal taxes. And they're getting paid with 175 grand or something per year. So all those wages, they haven't paid a dime in taxes. So imagine the amount of the tax bill that's going to be due when they file their taxes. Not to mention the underpayment penalties, interest, everything that's going to cram up all the way when they have to file and pay those taxes. The goal when you're filling out your W-4 is not to give too much money to the government where you're saving your money with the government instead of you investing it. And also not putting anything where you're not really paying any taxes and then the government will, come after you for taxes, interest, penalties, all kinds of stuff. So you have to have a balance when you're filling out that W form. You have to know exactly what you're doing. So they're deducting just enough taxes where this is what you're going to be owing at year end instead of over deducting or under deducting. If they over deduct on your W-4, most likely you're giving an interest-free loan to the government and you're just saving with the government basically. And they're going to give it back to you at year end when you claim it on your taxes, but that's pointless. That money could have been invested, you could have spent it, you could have, took it for a vacation or something. On the other side, if you're under deducting on your W-4, then you're going to be hit with a large tax bill and then again, interest and penalties and everything else that comes with it. So if you don't know how to fill out the W-4, especially after it changed in 2021, I would suggest that you talk to your CPA and have them help you when you're trying to fill it out. That was it for today, guys. I hope that was helpful, and until next time.